If you don't know who I am, my name is Shaquan and I'm the trading educator at SLFX Trading. So let's go ahead and let's get into the video. Now, before we get into the video, I do want to let you guys know that I am using the trading platform Tradingview. This is where you can analyze your price charts and look at a variety of financial markets, such as the foreign exchange market, stock market, ETFs, indexes, metals, commodities, whatever it is that you desire and choose to look at, and it is a free platform. So if you want to get involved with TradingView and you want this to be your trading platform, which you can demo trade and live trade through, make sure you guys check the link below. Now we're going to go ahead and get into the analysis, and we're going to kick it off with USD/JPY. Looking at USD/JPY, the biggest thing that we have to understand and locate immediately is that price is in a downtrend. So I'm going to erase everything on my price chart and show you guys what I am looking at to get that observation. So I'm going to be using a price label tool, and what a price label tool does, it allows you to plot your exchange rates at highs and lows. So that's all I'm going to do. I'm just going to locate my very tops and bottoms, just so I can get a feel for what price is doing and where it's going. So as we look at it, we can see that price is actually in a downtrend per the daily time frame. And because we understand that price is in a downtrend per the daily time frame, this gives me time to see how I want to play this information out. Now, I don't want to be the seller at this point, and I don't want to be the buyer at this point, because just today, right, price just made a new low. However, we don't know if this is the lowest at 102.726. We don't know if this is the lowest that price will go. So we don't need a price label tool here. The reason being is because if you look over here on my price scale, it's telling us that we still have 9 hours and 11 minutes until this candle closes. So we need to see how the candle will close for the day. What we also need to observe is how can we participate. Now, I know that because price is in an overall downtrend, I do want to be the seller, but I don't want to sell at this point because price could pull back. So this is where I'm going to observe, where do I need price to pull back to in order to get into a trade here. So where I want to see price stay below is I want to see it stay below the last lower high, or at 103.904s, and we want to trade alongside with this trend until the trend tells us it's time to stop selling. But until then, we know who we want to be. We want to be the sellers. We don't want to be the buyers, right? So what I'm going to wait for is for price to pull back, and I want to see if it can stay between the range of 103.94 to 103.400. So that's a 50 pip range that price can pull back to play in. And the reason why this is important is because we're on a higher time frame. We're going to be able to actually see the pullback, and we're going to actually be able to see, like, when price comes in, what's going to be the best candle that we can enter the trade on, so that we can get the most and the best bang for our buck. So that's what I'm looking at for USD/JPY. And obviously, once price lands at the low, once we figure out where the low is, all we're going to do is just trade back down to the previous low. We don't have that right now, but this is really good, great potential in case there is a pullback. The next one that we're going to be looking at is going to be Euro/JPY. Now, if you notice something about Euro/JPY and USD/JPY, they are both yen quote pairs. And here's what I mean. The JPY is actually located on the second portion, or the second hand of the currency pair, which means we have euro, you have USD, but the JPY is second in the currency pairs, which means it's a quote currency pairs. So what does that mean? Does that mean that we should just be following these and trading these both because they are Japanese yen quote currencies? No, but they will kind of mimic and follow one another just a bit. Now rock with me here as I'm speaking about this. As you guys notice that USD/JPY is going to the downside, and one of the main reasons could be because the dollar index, or the DXY, the dollar is really weak right now, right? And it's been weak since the beginning of the year. Euro/JPY is going in an uptrend. So if we look at it, if we, once again, we just separate what's going on using the price label tools, we can actually see that there's an increase right? 1.26, 1.25, 1.27, 1.25 again, that's higher than 1.25728, 1.27.242. We can see that there is a fluctuation in the exchange rates are going up. So this is good buying opportunity, right? Now, once again, now there's still 9 hours. If we look over here on the price scale, there's still 9 hours until this candle closes. So what does that mean? What this means is we don't want to be the sellers at this point. We want to keep buying because the exchange rates keep increasing, right? So depending on today's candle closure, now I'm talking about today's candle closure because once again, we're on the daily time frame, right? That's the best time frame we're going to be able to see the trend that bridges per lower time frames. So I want to see how today's candle is going to close and if it gives me a potential trading opportunity, because to me this is the best area where we actually could possibly have an entry today. Then I am going to trade back up to 127.242s, and if I want to extend the trade, my next exit will come at 127.59. or 0.79, my apologies. Now, the reason why this is important and why I use that tool is because if price is in a really true uptrend and we pass 127.242s, but my risk to reward is not that well, let's just say that price closes a little bit higher today, and I want to trade back up to the previous high, I won't have a good one-to-one trade or more than a one-to-one trade. So I'm going to extend that target so that I am making more than what I am going to be risking. And that's exactly what we want to do. We don't want to gamble our money away, but we do want to make sure that we have a decent risk to reward. Okay, so that's it for Euro JPY. Then we're going to go into one more, which is going to be Pound USD. Now, looking at Pound USD, what's important to note is that right now, Pound USD is retracing, and I'm going to use a keyword here, you guys. It's actually retracing. Okay, retracing just basically means it's going against the trend. Now, some of you guys who are looking at this may say, but Shaquan, when you look at the exchange rates are pushing up, because if we look at it, 1.35, 1.36, 1.31337, 1.31831, they're going up, and you're absolutely correct. But if we go up to the monthly time frame, what you'll notice is this pair is actually overall bearish. So that's why I'm calling this area the retracement area. Okay. However, we don't know how high this retracement can go. We don't know. So here's what I'm going to talk about. I'm going to talk about it in short order form. If there is a true pullback and price proves it can stay above 1.31831, if it comes back down between the range of 1.35227, 1.31831, and it can prove it can stay above this higher lows exchange rate, I will be buying back up to the upside. So I am looking for a pullback. Simply put, you guys. And let's talk about it here. We don't know if this is the highest point where price can, we don't know if this is the highest point. We don't know how price is going to close today, basically, right? So we need to see how high price can go before we just say this is the area that price can pull back. But if it does pull back, because I don't want to buy at the moment, I don't want to sell at the moment, want to see if price is going to give us a pullback so we can execute the trade at a better entry point, right? That way we get more bang for our buck, and if there is a pullback, we do not suffer the drawdown. So I am just telling you guys where I'm believing price can go to and where I would like to see price go to, so that it can give me permission to enter the trade back to the upside, as long as it can prove it can stay above 1.31831. So what does all of this mean, you guys? Well, all of this means is that what we're doing is we're trying to figure out what are our best trading opportunities for the week. And how do we keep up with that, you guys? We keep up with that by having a watch list. A watch list is basically a list of actual and active currency pairs that you are going to be trading or plan on trading for the week or the day or a month ahead. This watch list actually helps control what you do and what you look at, so you don't become confused. And the great part about Tradingview is that you can section your watch list off per how you want to trade it. You can have a section for currency pairs you're trading, currency pairs you're not trading, currency pairs you're back testing, currency pairs that you plan on trading but you're trying to figure out if they're best for you, and then currency pairs that you're actually running trades on. That's why I love Tradingview, because it's very customizable and it's really quick to do, you guys. So make sure you click the link down below. Now, watch this can also be called a portfolio. That's like the fancy name, right? But I hope you guys enjoyed this video. I hope that it was very valuable for you. And if it was, make sure that you guys subscribe, and I will be coming out with more videos soon. Make sure you guys are also on my Instagram page and on my email list, because we are going to be hosting a class tomorrow on Instagram, a free class, no charge class, where you can come in and get the gems behind Tradingview. So with that being said, you guys, I hope you enjoyed the video. I'll see you guys in the next one. Y'all have a blessed and safe trading week.